Okay, today we are going to react to a video of one of my favorite people in the whole wide world, Mr. Uncle GC, Mr. Grant Cardone. I've been to two of his seminars, one in Miami, one in Arizona. I've learned a lot from him from a business and sales perspective. I've actually met him in person as well here in Pasadena, California. Super nice guy. Also, very quick fun fact is, did you know that Grant Cardone actually graduated college with an accounting degree? So let's watch this video.
Never show the IRS that I'm making any money.
Okay.
When you get your first job and you're making 200 grand, your goal is to get that 200 grand to 11,000 bucks.
So there are a couple ways for you to make it look like, or should I say even better, because you can change that. There are a few ways for us to lower your taxable income, depending on your tax situation. Obviously, if you are a high income earner, if you make more than $150,000 and you invest in real estate, we can use your passive losses to offset your active income if you qualify as a real estate professional. If not, we could look into short-term rentals. Also, depending on your tax situation, we could also look into a C-Corp if you're taxed at the highest tax bracket. And if it would make sense for you to get taxed at a flat rate of 21%, then we could look into a C-Corp. That's a few ways for us to lower your income, like what Cardone said.
How do you do that?
Your taxes on this is going to be $1,100.
Right.
I want to spend $189,000 on goods and services that could help me make more money next year, because I'm never paying the IRS. Let's say I made 200.
Yes, but those expenses need to be ordinary and necessary for your business. For example, if you're a businessman, you cannot buy a Rolex and write it off as a business expense because it's not ordinary or is it necessary.
I could keep $189,000. I'm going to take that and go buy a $400,000 piece of real estate that'll give me $189,000 depreciation, and now I only pay taxes on 11.
Yeah, that's true. That's the beauty of real estate, is that when you invest in real estate, you get cash flow, or assuming that you invest in a good deal. You get appreciation, again, assuming that you're in a good deal and it's a good market cycle. You get debt pay down. And also you get leverage as well.
Money for the down payment.
You got a job with me, 200 grand a year. You're not going to spend any money on your lifestyle. You're going to park all that money into a real estate deal.
That's a little bit aggressive, like he made it sound like it's super easy, but for most of us normal folks, we still need to eat, we still need shelter, we still need to have a little bit of fun in our lives. So I would say that the ultimate goal is for you to make enough income so that you could save and invest about 30 to 40% of your income. That is the goal. Of course, you are not going to get there overnight. You have to start out small first, then slowly build your way up so that you can make enough income to save that much money monthly, quarterly, then annually.
Is a down payment to non-income producers.
All right, so there you go. Mr. Grant Cardone, one of my favorite business personalities I love to study from.